whenever you're looking back on your journal, are you telling yourself a positive story or are you telling yourself a victim story? If you are trying to reduce stress from trading, first filter out the times that you're in the market. When we're looking at multiple time frames, know that the smaller time frame tend to be weaker than the larger time frame. Welcome back to the channel. So today I want to be talking about ES and NQ as usual. I hope that you can actually hear me from this mic because I'm using my MacBook and not a stand mic right now. So fingers crossed. Alright, so before we get into the markets, I'm just going to show you guys what I have been looking at on my Notion. So first off, this is the weekly news calendar, and only on Thursday and Friday we would have news. So right now it's already Wednesday, and so far there's no news in the market, and I could tell that the market was actually moving towards the algorithm. So right now we'll just wait for more confirmation for us to enter a trade on Wednesday and Thursday. So on the weekly time frame, price has taken out previous week's low for ES and NQ. So I'm expecting bullish prices now into the premium range of previous week. So this is the entire weekly candle. And I'm expecting for price to go back into the premium of this area. That's for ES and this is for NQ. So you can see that it has taken out the previous week's low already. And then on daily, I've marked out the previous day's wick as a FVG, fair value gap, if price wants to drop into it. If price wants to drop into discount. But for now, the discount area will be previous day's high, where daily fair value gap may form as a bounce before higher prices into 61.8 or 78.6 of last week's range. So within the fair value gap, we see new week opening gap. Okay, so on here, this entire week from previous day, I took the Fibonacci and used the 50%. So marked out the 50%, the beginning of this fair value gap, and also the ending, which coincides with this new week opening gap on ES. And then over here, we have this last week with the 50% coincide with new week opening gap. Okay, so this is a fair value gap that is unseen on the daily time frame. If price was to drop lower, this is where I think that price might find support. Right where the daily fair value gap is also where we see the last swing point on the daily for the last down move. So if you look at the high of this daily fair value gap, it's created by this candle, these two candles that are of opposing colors. So it's a divergence in itself. Okay, so this is where I think price is going to go higher into. And then on H4, I found a discount PD array underneath price. So price is over here right now. And then right below price, we have a daily fair value gap, H4 fair value gap, in line with the opening from the daily fair value gap. Okay, and then here as well, we have H4 fair value gap with the daily opening of the week, which is the open price of the previous day. So right now I have a premium above me and a discount below me. And since I think that price is bullish, the better risk to reward would be to wait for price to drop down into H4 before going up into daily bearish fair value gap. So if price doesn't come down here, then this wouldn't be a good risk to reward if I was to put, a trade. And to measure out, you can see that price is in the middle. So if I just enter here, stop loss underneath, take profit above, it's not a good risk to reward. So we'll wait for, price to drop down, and then this would give a much better move into the higher time frame target. When we're looking at multiple time frames, know that the smaller time frame tend to be weaker than the larger time frame. So if I know that my price is bullish in the larger time frame, then I won't short into the smaller time frame targets. I would just wait for price to reach there before taking a long into the larger time frame. So this is for both ES and NQ. So I would just wait for more data. If price was to fall down, like which one would show me the sign of higher prices. Okay, so I came back. So that was 8 p.m. on Tuesday, and then on Wednesday, that is New York timing, by the way. So this is 2 a.m. in New York on Wednesday. This is what we see. Asian consolidation in the H4 candle over here. And then price may drop into H4 fair value gap before going higher. So I'm just regurgitating whatever I just told you guys. And then going down into H1, London is pushing higher. So if this is a protraction, price may drop into the H4 that I'm looking for. So when I see things like this, for example, the first move after opening is higher prices, I would anticipate for New York to reach into this price action. And then I would think that New York PM session is not going to do much. Plus, today is Wednesday and there's no news. So it might wait till Thursday before it gave us this move into higher prices. It has the entire of Thursday to play out this H4 fair value gap going into daily bearish fair value gap. And today is Wednesday with not much news. So I don't think price wants to move too much as well. So this would be a good resting point before going into Thursday. So with that mindset, I can already tell myself that if I were to take a trade today and if the stars line up in the smaller time frame, I would go into like minute 5 or minute 15 and then take profit at H4. So whatever that price is showing me in the smaller time frame will be the entry point for me into larger time frame moves that I'm looking for. Okay, so M15, yeah, we can see that price is pushing higher. So the markets, this is what it's doing right now. I marked out this 350 to 410 macro timing, and this was the last area before price started dropping. So if I were to go into the larger time frame, we can see that the Judas swing that I was looking at is in play currently. So market open, went higher, and then during London pushed lower. So let's see if it would even reach here before New York. So I have to wait for timing before I anticipate more of the move. So if the entire London, it spent its time pushing into this H4 fair value gap, most likely I would just sit out for New York AM session, because this would have already given quite a big move, right? And then maybe New York, it just wants to consolidate, gather more orders before going higher. And if there's signs of price breaking out of this fair value gap really quickly, then I'll look for price to reach into the lower discount PD array. Okay, both of them have taken out Asian low. So I'm just going to adjust my charts to fit in this screen recording. Okay, so this is copy image. So I would always put in the time first. So this is 6:31 a.m. New York time, as well as the time frame I'm looking at, which is minute 15. Judas swing. London has taken out Asian range. So this Judas swing is completed, and my perspective was right because it has taken out the Asian range low. So it went higher and then came back down here, higher and came back down here. And for me, I was actually hoping to see that price go into either the previous day's low or the H1 fair value gap before showing signs of reversal. But in this case, it did not do that before dropping, and now it's reacting off of the new day opening gap. So I'll just keep watching and see when price starts to move in ways that I can anticipate, and then my gut feeling would tell me something like Okay, this is the trade. So I'm just watching. So here you have a bearish fair value gap, which turned into a bullish fair value gap over here. And now price gave a nice little reaction. So this is M15, bullish fair value gap. Wow. NQ is at the new week opening gap. So let's see how much it wants to run up into. Minute 15, bearish fair value gap created at the same time with NQ, so there's still no divergence. They are still reacting the same way, and when they show me signs that they are doing their own thing, and that's when I will make a decision. All right, so that's it for now. I'm gonna give you guys an update later.
Some power. So reduce words like angry, mad, irritated. Try to use different phrases and words. Watch the words that come out of your mouth. Things will magically change when you start changing your speech patterns and when you start choosing different words.
So that was Kevin Trudeau. I'm playing one of his private, I think, courses that you get from the black market. But overall, I really like the message that he shares. And so today he's actually talking about how powerful your words are, and your words create your reality. So imagine if life is a game and you are the player, you get to set the rules. What kind of rules do you want to set for yourself? Do you want easy wins and easy level ups, or do you want it to be difficult? So you are the creator of your world, and it made me realize that trading is like that as well. Whenever you're looking back on your journal, are you telling yourself a positive story, or are you telling yourself a victim story of how the market has taken you in again and how it has taken advantage of you, instead of this is what I saw in the market and this is how I knew that it was going to happen, and it happened just as I expected it. So whenever you're writing a journal, be as delusional as you can be, because this is what is going to fit into your gut, and it's going to create the gut feeling for you. So the more times you practice this, the more times you speak nicely to yourself. It's always easier to pick up a bad habit than a good habit. So create this habit of speaking nicely to yourself and what you expect to see in the market. And then you would see it playing out, and then you get to reward yourself because you are the one who called it. You are the one who called forth for this move, and it happened exactly the way you anticipated it. And the next time you see it setting up again, your gut is going to tell you that, okay, this time you can enter. And there's also times where you're like, oh wow, everything is lining up perfectly, but your gut is saying, not this round. And you just follow it. And the more you practice, the more you get better at it. So this goes for everything else as well, from trading to your relationships, to your work, to how you finish a book, to how you create a new habit, how you go on about your diet, taking care of your health, your workout plan, everything. Okay, so now back to the charts. That is what I like to do on days, or like my lull period. I like to play a little motivation here and there. So the last time we saw the markets, it was still creating this minute 15 fair value gap, right? So I marked out this fair value gap and this one. And then now we can see that NQ has already broken above and retested this minute 15 FVG, while ES is still staying within. So this itself is a divergence in the making. So we can see that NQ is pulling back way more than ES in regards to its own last swing move. Okay. And something else that I noticed is that all these boxes are actually the Q zones of ICT. So we have Asian, London, and waiting for New York. So this box right here is the representation of the last New York session. That's why it's down there. But this is time axis, and price. So later, when 9:30 comes around, right now it's still 8 a.m. New York. When 9:30 comes around and the market opens, this box will then follow to wherever price is. So what we can see is that during the Q zone of London, price gave us this Judas swing, and then it fell down below, and this is where you usually take your profits when you're doing Judas swing. And then now it's just like doing nothing until the next Q zone comes around. Right now it could be considered profitable. I mean, from this discount PD array to this premium PD array in the minute 15 time frame. But all in all, you can see that it's not really doing much. It's really just waiting for time. And a lot of other days, this lull period is also the consolidating time, waiting for either news release or basically just New York market open before price starts to give us the next volatile move. In the beginning of your trading journey, you are trying your best to find as many trades as possible. And then a few years in, you realize that there are so many trades out there, so many different systems, so many different type of people with their different methods. Once you hit third or fourth year, you're actually trying to reduce all of those options that you have. And one of the biggest one for me is definitely timing. When I first started trading, I was doing 24/7 all the time on my charts, out for dinner, during work, in the toilet, first thing when I wake, middle of the night. But as I, gain more perspective of the markets and learn more about ICT, I keep reducing my trading time to, just Asian session for like Japanese yen or like Asian currencies, and then London for like pound and euro, and then New York for everything. But after, shrinking all these years, I've now just stick to either London Q zone or New York AM session. So I'm not there trying to trade all 28 pairs on foreign currencies or like mixing up all the different indicators to put in different pairs to see what is giving me the signal to enter. I'm only sharpening my knife on ES and NQ, and when I have extra time, I go to check out EU and GU. But do I take a trade? No, I'm just studying price action until it gives me so much confidence and gut feeling that it's time to enter, then I'll enter. But overall, like ES and NQ is enough for me. Like they keep me busy. Another thing is like really just excuse yourself from the market, like make yourself unavailable to too many options. So even when I'm just waiting for a trade to play out, I would read a book or do Duolingo or play music or study. I won't be there in the charts trying to find the next entry and the next entry. So my advice is that if you are trying to reduce stress from trading, first filter out the times that you're in the market. Make it something that's repetitive. Make it something that's easy for you to show up every day at the same time, looking for the same things. Hi everyone, so right now it's 9:33 a.m. in Singapore, which is 8:33 p.m. in New York. And I'm gonna make an update from where we last left off. So the last scene we saw, price was moving around this to minute 15 fair value gap. It was right here, and then it went higher to tap onto this bearish fair value gap, and you can see that the moment 8:30 comes around, when our New York session is in play, it moved like it was drawn, into the H4 fair value gap. And then around 10 a.m. it actually broke out of the H4 fair value gap. So at 10:19, I wrote it here. On the hourly 4 candle, price dropped and closed under H4 fair value gap, showing more bearish move. So in here, you can see that the second candle was already in play, and it was reaching into this weekly bullish fair value gap, as well as the previous week's low again. And then on NQ, it closed beneath the H4 fair value gap as well, and was tapping onto this new week opening gap. And then I found a swing point right at 10:15. So the 10:15 to 10:30 candle was when we found a nice swing point. So in price, you can see we have a low, lower low, higher low, and then low, lower low, higher low. That was the precision swing point. So I was writing in the quarters of timing that price is still in the reversal quarter of New York. So going into reversal or expansion of daily candle. So the last quarter happens after lunch New York. So I'm anticipating some sort of a reversal or expansion. So on the daily time frame, price is still looking bullish as weekly fair value gap is filled and the new week opening gap has been tapped as well as previous week's low. So I went back out to the daily time frame, and then this picture to me is still bullish. Like I'm still anticipating for price to reach into this daily bearish fair value gap in line with this 61.8 retracement. So I was just looking again at the bottom and realizing that price has actually tapped on, you know, the discount PD arrays already multiple times, and it's showing like wicks. So I've also measured out the previous day's wick, and then I mark out 50%, and this is where I get this red line from. So cleaning up the charts, you can see that this 50% line is where it bounced off of, including the weekly bullish fair value gap that I've removed. Okay, so from 10:50 to 11:10 macro, this is the position that I've came to enter. So it was right here. We have new week opening gap and then stop loss underneath the low, and then my take profit is right up there where the last fair value gap on minute 15 is. Okay, so updates at around 10:58 after entering the position before the macro was even over. I told myself that Dow Jones has already reached 50% of this entire New York range, while NQ and ES are still lagging. Okay, so last but not least, I took out the trade at break even over here because it was kind of lackluster. And now with daylight savings, it's getting way past my bedtime. Like over here it's 11:16, right? But for me in Singapore it was already 12:16 a.m. So I was getting tired, and I said that price may be going lower for New York PM session, and since I'm not in line with it because I'm bullish, I'm going to bid now. 12:15 a.m. in SG, 11:15 in New York. Okay, so that was a break-even day, and I'm just gonna show you guys what the charts did after, so that you guys can still learn from the price action. If you're in New York, you could happily take this trade. Okay, so what happened was after, before lunch, it was just doing this up and down movement, and then at about 2:30 over here, 2:30, it started rushing into closing at 4 p.m. New York, where it closed out at the full FVG closure on the H1 time frame. So this is the H1 time frame. There's a lot of things on my charts. I'm so sorry if it's confusing you, but here you can see the low of this candle is the beginning of the opening gap, the fair value gap. Yeah. Okay, so it closed up by 4. So the thing is, if you are in this trade, you want to be out of it by 4 as well, because usually after 4 to 6 it's just giving the consolidation again. Okay, so this entire trade would have been a 1:2. I hope that by learning this, you guys can, refine your entry yourself. But overall, this is just, the larger move that I'm looking at, and this is how I would usually do it. Time plays a big part in all of my trades. So for example, whenever I enter in the New York AM session, I try my best to exit before this 11:30, and then the last I will hold it until is 12. So right now with the daylight saving, I'm planning to do more of London sessions as well, and all this Judas swing is a easy 1:1 risk to reward. And I know a lot of people will not go crazy over 1:1, but I would say that if you are correct like 70% of the time, 1:1 is profitable. Like, just stick to profitability instead of trying to impress everyone with your risk to reward. Right now, let's just go into the daily time frame and see what else we can find. Updates of a new chart. All right, so we can see that yesterday, the day that just played out, which is still in PM in New York, but AM for me, Wednesday itself, it closed with a long wick. So I'm just going to measure this wick out as a fair value gap, and here we have the 50% level again. So if price on Thursday right now pushes down into this 50%, I would see it as a potential support for price to go higher, because I am still bullish into this daily fair value gap. So I've marked out the 50% for this one as well. And now going into H4, let's see again. So we have nice full closure. You can see how price, the opening and the closing of the next candle just stayed outside of the fair value gap. And then now we have another full closure up candle, and then this one as well. So we're just rebalancing this H4 fair value gap. All right, since it has been rebalanced, I'm going to remove it, and on a smaller time frame I'm sure I'll be able to find something else. So for now, I'll just clean up the charts a bit. Okay, so I'm anticipating for Asia to be more of a range, and then I'll see which side does London manipulate, and then I'll take action from there. So I'll give you guys another video update. Just leave it down in the comments if you guys want to see. Anyway, it will all be in my journal, and all I have to do is just explain it to you guys. But let me know if this video has been helpful to you. Leave a like, subscribe, and I'll see you guys in the next one. Bye.